Nishal Maheshwari, Head of Research with Edelweiss Securities, joins us. Nishal, morning. What a delight to have you back on ET now. Nishal, what's been your portfolio strategy? I mean, we are in uncertain time, and uncertain time, they warrant extraordinary measures.
Yeah, Nikunj, I think a couple of things basically which are highlighted in the portfolio. Obviously, there are two things which are still going strong. One is demand on the domestic side. So we have been recommending our clients to keep on holding on to their FMCG and consumer portfolios along with pharma. Now, the other thing which is again positive is basically a falling rupee. So export-oriented companies, especially IT and pharma. Again, I think these are the two or three sectors which we have been recommending. We have not recommended as yet to add beta to the portfolio because the outlook there especially remains to be quite disturbing, and we are not seeing any signs of growth or a pickup on the economy side. That is already evident basically if you look at it, IIP numbers and all. So I think these are two or three sectors which we have been recommending our clients. Again, I think autos has been a bright spot as far as the rate sensitives are concerned, and especially Bajaj Auto, which we like quite a lot, and Maruti are the two stocks which we have been pushing.
So Nishal, what is it, or rather what's your sense in terms of where the market is headed? Does it seem like 4,500 around or 4,800 around, the index has a strong base, or do you think after yesterday's selling now we could see a scale up back to 5,000 levels?
See, market, obviously it is cliched to say that it's going to be very, very volatile. But I think around 4,500 you're going to start seeing value coming back into the market. If we have global outlook somewhat stable, so Greece problem and all, some sort of a solution comes out on that, then we'll definitely start seeing risk coming back on the table for most of the FIs. And we are going to start seeing flows coming back into India. Definitely 4,500 is an attractive level. If I looked at for FY13, the earnings for the Sensex could be anywhere between 1250 to 1275.
Nishal, are you somewhere working with the possibility that benchmark indices or major averages, they could retest December lows, or they could also overshoot December lows?
There is a fair possibility, Nikunj, of that happening, basically, given that our outlook on rupee is pretty grim. Again, the Greece outlook also can cause an issue, basically, and the eventuality could be that Greece comes out of EU, and that could, for once, create a big chaos in the market. Though it may be temporary, but I think it will create a big chaos, and you may see market hitting below the December lows.
So Nishal, I mean, we've already seen the rupee, seeing almost 50 levels inside. How bad could it get from the current juncture?
I think the rupee, if you look at an RER basis, then rupee is sort of undervalued for the moment. But given that your current account deficit continues to be at a steep level, so you may see a level of around anywhere 55 to 56, easily breaching that number.
I stand corrected. 55 is what I meant. 55 already inside. 54.33 is where the rupee is currently. So Nishal, I mean, could that trade of IT as a pack being beneficiaries of the rupee slide actually play out for long, or do you think the rupee volatility is not going to augur well for the IT basket as well?
No, I think that should play out. Basically, if I just assume that the rupee is at around 53 or 54 on an average, then most of the IT earnings would be upgraded by at least 10 to 12%. And that would mean something like Infosys, where we assumed earning of around 180-85 rupees to be achieved in FY14 has to be upgraded to by 10 to 12%, and that would mean stocks going up by around 5 to 6% from these levels.
Nishal, big money or fortunes are made when investors, they sell greed and when they buy fear. So at what Nifty level you would say it's time to buy fear?
I think if it hits below December levels, basically I would definitely be a buyer on the market, and especially rate sensitive where there is some value emerging. As you know, Nikunj, in these kind of irrational markets, everything just gets sold out. And I believe that if it hits below December levels, there is going to be a panic, a capitulation kind of a situation is going to emerge in the markets. And at that point of time, I think it would be good to go out and start hunting. For the moment, I would recommend people to actually identify their stocks which they would like to buy at a particular level, and then don't hesitate when the market hits below their December levels.
The silver lining, of course, Nishal, is that, you know, crude prices have come off a bit. Do you think commodity cool-off is going to be the one trigger which perhaps may support the markets?
Commodity, if you look at it, the Goldman Sachs commodity index, GSCI, basically has already come off quite a bit. It's down around 12% from the top. But what has happened is simultaneously Rupee has been down by around 20%. So effectively you've not got the benefit what India should have got of a falling commodity index. And that's why the issue basically that Rupee has negated all the fall, and rather because of 20% fall, actually the commodities may be higher priced compared to December, and that may once again raise the problem of inflation coming back.
Nishal, what makes you bullish on L&T value, the management guidance for FY13, or are you betting on a strong revival in the private sector capex in the second half of this calendar year?
So I think the one thing which is positive about L&T is that the company has recognized that in India it's going to be a long haul. So might as well start looking out for business outside, and I think there's enough business outside, especially in the Middle East, given that the oil prices are on a boil. So there is huge amount of capex which is happening in the Middle East, and there they are concentrating. Though the competition would be higher, the margins would be lower, somewhere around 9-10% kind of EBITDA. Most of the business are available, but at least they are concentrating and not keeping their capacity idle. So that's what it is positive about, that they will have a strong order book coming back for FY14, and execution is also going to be better, given that 25% of their order book incrementally is going to be in the Middle East.
Nishal, is that the new sunrise theme you are betting on, that buy companies which are going global, ignore companies which have a strong local presence?
Not necessarily, Nikunj. Actually, the local consumption story still remains to be very, very strong. And most of the stocks which we are recommending on the consumption side is obviously the local theme only. Yes, on the capital goods side, we are telling people basically that if the company has the capability to go out and win orders abroad, given that the current scenario in India is on a slow mode, so definitely look at those stocks basically which can compete well, though maybe at a lower margin, given that the international margins are lower than the Indian margins. But at least the top line growth is coming through.
Do you worry about valuations in the consumer space? Because if I look at valuations of Nestle, HUL, ITC, Marico, even Godrej Consumer now, consumer stocks are priced to perfection.
Agree with you on that. So for the international buyers, definitely they need to be cautious, given that the valuations are pretty steep. But for the domestic buyers who have got an India dedicated portfolio, basically there has to be a hiding place, and I think that's why you continue to see that these valuations continue to remain where they are, or even become slightly better. But this doesn't take away the fact that all these companies still continue to do pretty well and deliver good results, whether it was Levers this time or ITC. I think all of them have come out with once again stellar performances.
Nishal, if I want to put a graphic on TV, and the headline of that graphic is Nishal Maheshwari's next multi-bagger ideas, what should that graphic contain?
Very difficult to come out with multi-baggers now, basically, since the market is so well researched. But definitely you can say that there are 30-40% ideas from here. And I would put out basically some of the large caps which have been decimated in this in this current downturn. On a horizon of 1 to 2 years, I would put Bharti or RIL or all of these stocks should be around 30-40% up in the next 1.5 years.
And what could challenge your conviction on Bharti and Reliance Industries? Because that's a brave call. I mean, you are asking our viewers and maybe you're asking your investors to be big contra buyers.
Definitely. Given that most of these companies actually are now close to the replacement values. Again, the issue remains to be there are short-term negative triggers on these. So in case of Bharti, there is an outlook what is going to happen on the policy front. But I think that is already priced in. If you look on the competition side, the positive thing is basically because of the high auction prices for 2G, his competition is going to come down and you are not going to see margins pressure coming in for Bharti. So that's why I think it's going to be positive for Bharti on a more than 6-month kind of outlook once the short-term issue of telecom policy goes out of the way. Again, for Reliance, I think on a longer-term basis, we will see price rise happening for the gas come FY14. Secondly, I think India with this kind of a current account deficit cannot afford Reliance not to give approvals for his D6 well. So I think these are all stalemates which are going to get cleaned out in the next 6 months. And thereafter, I'm hopeful that these stocks are going to regain their values.